Hi everyone. Just another video. Really on the question that we were finishing there in the last class there on Friday. And we had gone through all the workings, and the last one that we need to finish off is assets and liabilities. A little bit of tidying up that needs to be done there in part 8, I think, in that question is in 2022, question 6, higher level. Um, Now, for most of this, we've done the workings already. So this should be nice and straightforward for us. If you look at point 8, it says including the assets of the firm's assets and liabilities of the firm on the 31st of the 12th, 2021, were bank 108,600. Now they're just giving you that. That's really our figure for our balance sheet. The stock 85,122, which includes the stock of heating oil of 1,100. Now we'll have to separate that. That's probably the first working. Debtors 121,500. Wages due of 4,750. Trade creditors of 57,800, and electricity due then of €240. So maybe what we'll do first of it, we'll just do this bit by bit here. All right. So the bank, I'm just going to call this A and bank, and I'm just going to make a note that the bank doesn't really take any workings here at all. It's 108,000. So 108,600. Now that's going to be a current asset in our balance sheet. So we're just really making a note of that. Okay, there's no great workings there. The next thing there then, or next point that they mention is stock. All right, so there's a small little working we need to do here because there's the stock of heating oil or stock of oil being mentioned here. All right, so we're going to just open up a separate account for stock. Okay, and I'm just taking the figure that they've given us there, right? So the balance, or the closing balance that they say at the 31st of the 12th, right, is 85,122, right? That's the figure that they've given us there. Okay, but of course there's a stock of heating oil here then as well. So right underneath that, I'm just going to do a separate working stock of oil. And I'm just going to put this in a different color. So what we're doing, well, actually, sorry, I'll just take a step back here for a second here, right? Stock is just already closing stock here. That's an asset, and the stock of oil is also an asset. But what we're doing here, we're taking the stock of oil, right? Stock of oil out of the stock account. Okay, so you credit that account, your closing stock account, and you're going to debit your stock of oil. Okay, so stock and 1,100 stock of oil. Okay, now I'm just going to make a little note here that that's going to be also a separate current asset for our balance sheet. So that's really the stock of oil being taken care of. All right, and then just to tidy this stock account up then first. So balance carry down. This is going to change our stock figure then. What we'll have is €84,022. All right, so now that's our new figure for closing stock for current assets in the balance sheet. Okay, so that's the first work in there really. All right, now we'll go on to, I think, wages are mentioned next. So again, I'm going to call this C, all right, and wages. All right, so wages and general expenses. So we've made a couple of changes here already previously in the question. All right, so there, if I revert back to the question there, I know there's not much work in the debtors, 121,500, but the wages due 4,750. Now that's what we're going to have to take account of here. All right, so I'm going to do a work in here for wages. So draw up a wages account. wages is just an expense. I think it's wages and general expenses, isn't it? Okay, just shorten it like that. Now, I'm just going to take the bank figure that we've already dealt with. I think it was 165,750. All right, we made a change because there was insurance included in that, so we had to open up a separate insurance account, so that was 2,800. So we've dealt with that previously. All right, we had. I'm just going to drop a separate account here, and I'm just going to call it wages due, because I think we have stuff that was due at the start of the year and due at the end of the year, right? So, yeah, we did. I think it was there was stuff that was due. It was an open liability, right? And that was 3,200. So what we did, we reversed it. So reverse open accrual, right? 3,200. So really what you're doing there, you're bringing that account back to zero. All right, so we'll debit the wages due and we'll credit this account then, because this has come from the previous year, you see. First 3,200. All right, now this comes to our a point then in the year that we're doing, right? That there's wages due at the end of the year here, due at the 31st of the 12th, and that's a build-up of maybe something that's happened during the year, but we have to include that into our accounts here. Okay, it must be included as a cost, so that 4,750 must be included in our wages and general expenses. So what we'll do is we'll include it here, so you're increasing that expense, right? So 31st June, 31st of the 12th, right? 4,750. Okay, so debit your wages and general expenses, and you're going to credit then your wages due. All right, so due 31st of the 12th. So there's your double entry. All right, now you see that 4,750. That's going to be a current liability in our balance sheet. Okay, so what you can do now, you can tidy up this wages and general expense again, right? So balance carry down. If we put all this together, I think you end up with 164,500 as a balance carry down. Just going to tidy it up here now. So I'll just put my total, as I total all those up, I think it's 170,500. And right down 164,500. All right, and that's our P&L figure. Okay, so that's the figure that we'll put in wages for our P&L. All right, the other figures that are being mentioned, assets, liabilities. Yeah, debtors, they're just giving us that figure, 121,500, so we don't have to do anything there. Trade creditors is 57,800. That's okay. And we just have to include the electricity due at 240 euro. And that's a current liability. There's one last little working we need to do here, and it's to do with the rates. We haven't done a working on that yet. So what I'll do, I'm going to call this part D, maybe, right? And I'm just going to call this maybe rates. All right, and we're going to open up a separate rates account. Okay, and rates is just an expense. Okay, now I'm just going to fill out the figures that we already have. So the bank, 27,600. And we also have, of course, there was rates prepaid in this question, wasn't there, at the start of the year, I think it was. And the very first paragraph is 3 months rates prepaid 8,100. So there's an opening prepayment here. So what we can do there, I'm going to open up a separate account here, and we're just going to call this rates prepaid. Now, this is an asset account. Any expense paid in advance is an asset. Okay. Now, yeah, and we have a there's an opening balance here, of course, isn't there? So on the first of the first, we have an opening balance, right, which is 8,100. I'm getting that from the very first paragraph in the question. What I'm going to do is I'm just going to make our life a little bit easier here. I'm just going to reverse that open accrual. So what you do is you're just kind of bring this back to zero. All right, this comes from the previous year. So if I credit the rates prepaid account and then debit the rates expense account, the same amount. Maybe we can open, or sorry, not open accrual, open prepayment, I should say. All right. Now, what is I suppose what we have to kind of figure out here is, if you look at point 4, rates for 12 months, right? So they're telling us that the rates for 12 months is 27,600. All right, that's what they're telling us there. All right, I'm getting that from point 4 in the notes there in the question. All right, so to figure out what's we have to figure out a closing prepayment here. Then, all right. So what you can do is, I'm going to just do a little working down here. Okay, so so we know what 12 months. So 12 months rates are 27,600, right? I want to find what it is per month. All right, now that's nice and easy. What we can do is just divide 27,600 by 12. All right, so 27,600 divided by 12 months, and that will give you 2,300. All right. Now, in the note, what we have to do is see in the notes, is there any mention about assets in the assets and liabilities about rates or anything like that? I don't see anything there. The only thing we can do is the 3 months prepaid must be carrying forward here, it looks like, because they've already he's paid 12 months rates through the bank account, and the assets and liabilities are only mentioning bank stock, debtors, wage due, trade creditors, and electricity due. So what we can presume then, there's going to be another 3 months prepaid here. All right. So what we'll do is, so closing prepayment. It's going to follow the same format as the previous year. So it'll be 2,300 multiplied by 3 months which should be 6,900. Okay. So there's our little work in there then for the closing prepayment. So let's put this in a little colour, different colour here now. So 31st of the 12th. I'm just going to say closing prepayment 6,900. I'm just going to make a little note because we're going to need that then for our current asset in the balance sheet. And don't forget then as well, we'll have to, if we're debiting this account, all right, we have to credit then our, the double entry there is going to credit our rates expense account. So the closing prepayment, 6,900. Okay, so to just tidy that up then, so balance carried out is going to be 28,800. All right. So we just tidy this up a little bit. Okay, so the totals on each side is 35,700. Balance brought down 28,800. Again, I'm going to make a little note because that is our P&L figure. All right, and yeah, that final little bit closes off the workings for that question. So really, what we need to do then is do a statement or a kind of slash balance sheet showing McSharry's profit and loss account, and then trading profit and loss account then as well. But at least we have all the workings done now.